Welcome back to the Stock Market Options Trading Podcast. I'm your host, Eric O'Rourke, and in this video, we're going to talk through some of the big events of the week and some key levels as the market continues to push to new recent highs. We don't quite have a full all-time high breakout, but we're closing in on it. So let's zoom out a little bit on the daily chart. And I want to show the previous highs, which were earlier this year, January, February, mid-February is when we actually peaked, with SPX hitting an all-time high, closing high of about 6,143. Right now, we're trading just over 6,000, but the uptrend is intact. And what I want you to notice too on the chart, we're looking at the daily chart here, is all the major option levels are in relatively close range. And this is a sign of falling volatility. One way we can look at these major option levels, which right now range from about 5,900 to 6,100. And one way we can look at these levels is, where is the market interested in going? A lot of times, up until maybe last week, we had some big major levels below, I think right around 5,000. So there was definitely some hedging. It looked like hedging to me that was in place in case we did roll over. There's a lot of headline risk out there right now with the trade war and negotiations and tariffs and all that stuff. But that hedge has kind of been lifted, and now all the action is really in the recent range, with XPX trading just over 6,000 when I'm recording this, which is Monday afternoon on the June 9th. The call wall is not too far away at 6,100, and the put wall is around 5,950, but there are a few levels below, all the way down, like I said, 5,900. I'm going to zoom in here on the daily chart. And just real quick, if you're listening on Spotify, don't forget that I am doing some of these in video podcasts now. So if you're looking to see everything that I'm actually talking about, I'm going to try to describe it as best I can. Go to the Stock Market Options Trading YouTube channel, and you'll find it there under the podcast and in the videos section. So again, right now, the market continues to drift higher, and 6,100 would be the loose resistance, with 5,900 being support. The vol trigger is technically at 5,975. So if we were to pull back and get below, let's say into the mid-low 5,900s, we would really want to be on the lookout for a potential move lower. Right now, I'm going to loosely call it support, but if we lose that, we would be losing a couple moving averages as well. And again, we're in an uptrend. The uptrend's intact, and we're trading in that direction. So on the docket this week, we have a few major reports that start on Wednesday. We have the core CPI that's going to come out. On Thursday, we have core PPI. And then on Friday, we have inflation expectations. Right now, the market is approaching all-time highs again. Let's call it another 100 points or so away. And I'm actually pretty surprised, because the Fed has not been very I don't want to say they've been hawkish, but they haven't been giving us any clue that they're going to cut rates. And with the market going up and the jobs relatively stable, we did see some tick downs last week in job numbers and job resiliency. However, everything still looks pretty good. So the market is heading into these key levels. I think we're going to get to a little bit of resistance, but again, with the headline risk around trade wars, anything can happen. So if we get a lot of trade deals, the market, I think, could continue to drift higher. So with the market uptrend intact, let's switch over to the Alpha Crunching Trade Ideas tab. These are trades that are posted before the trading week begins. Today is Monday, June 9th. This list becomes available on Sunday, the 8th. So you'll see the date here. We have the June 9th stuff. There's several trades here. Most of them are SPX credit spreads. We have, I think there's 5 or 6 put credit spreads on the docket this week, and 3 or 4 call credit spreads, so that we can stay relatively balanced in these uptrends. That's what this is designed to do. If we go back to the chart, I'm going to pull off these option levels, and I'm going to add on a few of the trades that I'm still in from last week. And let me zoom in, and you can see that at the current levels, I have a few put credit spreads on, and then I have a couple call credit spreads on as we continue to move higher. And I'm basically just layering in these spreads, typically more lean to the long side, but we are sprinkling in some call credit spreads to sort of hedge us if we get any pullbacks. I think we're about to enter the chop zone. Maybe we get up to 60-25, 60-50. but I don't know how much further we're going to get until core CPI comes out on Wednesday. So what I might end up doing, I do have a June 11th 60/30, 60/40 call credit spread hedge. I got a credit of $2.60 for that trade a while back. I can see I put these lines where I entered on May 27th, and the market's basically gone against this trade ever since. But I've been doing put credit spreads on the way up. So what I'm thinking about doing is, now that I know where the major option levels are, I might end up rolling this particular spread higher and selling a new put credit spread to offset that debit that I would need to pay to roll that. And that would basically convert this, if you will, into an iron condor, but I would still have this particular hedge on. So I'm just, trying to place trades each day. We have several trades on the docket for this week. Let's go ahead and look at the weekly forecast as well from Alpha Crunching. It's definitely net positive. This makes sense. We're in an uptrend. The average movement is accumulated over the week, and we end up with a net delta of what's about 50, 60 points. However, what we can see in the forecast is a lot of the strength over the last month has happened in the first couple days of the week, and then it kind of gets choppy or dicey. That could play out this week as well, because there's no major events on Monday and Tuesday, although they did squeeze in, it says President Trump is speaking Tuesday afternoon at 4 p.m. So that's after the market closed. So who knows what's going to happen there. But basically, the forecast is still positive. We're staying on the long side. If we compare this week's forecast to last week's, we can see that we are net gaining the number of points, which is confirming the fact that we're still in an uptrend. So if we look at a couple of the metrics, though, one thing that was interesting is that even though the market's moving higher, our net delta, our directional strength ratio, these are both positive. But the average strength deviation number is actually negative this week. And what this number tells us is basically it looks at the last month of forecast, and it compares this week to the previous 3 weeks. We did have kind of an outlier week a few weeks ago where the forecast was showing a net positive delta of 156 points for SPX. When you average the 3 weeks out, though, this week's forecast is actually below that average. So that doesn't mean we're going to sell off and, roll over and die, but it does sort of tell us that the momentum is slowing. Volatility is coming down. I would just say negative volatility is coming down, and we could continue just kind of melt up and do a slow grind higher. That's always possible. But that momentum to get up to the call wall or those all-time highs, and let's call it 6,100, is starting to slow down a little bit. So over the next couple of days, we're going to be looking to see, what does the Fed say? What does Trump say tomorrow? And to see if this uptrend can stay intact. Doesn't really change our trading plan, because the spreads that we like to take have built-in stops because we're trading at the money. So our risk reward is definitely in a good position for that. So we're going to continue to take these trades. And if you'll notice, if we go back to the trade ideas tab, if I put CCS in here for call credit spreads, we have call credit spread hedges that are coming on Tuesday, Wednesday, Thursday this week. So even though we're net long, we do have some balancing sort of hedges to put in place to sort of minimize any losses in case, we do roll over. So that's what I got for this week. Thanks for watching and listening, and we'll see you in the next episode.